Good afternoon, everyone. I warmly welcome all of you to the webinar on insurance management and insurance in the current economic climate, organized by the Insurance Subcommittee of the International Chamber of Commerce Sri Lanka. The International Chamber of Commerce Sri Lanka is part of International Chamber of Commerce Paris, being the world's largest business organization with a network of over 45 million members in over 100 countries. ICC works to promote international trade, responsible business conduct, and global approach guideline to a unique mix of advocacy and standard-setting activities, together with market-leading dispute resolution services. ICC Sri Lanka works through several committees. Each of these committees are led by professionals. It plays a pivotal role in connecting business in the world and act as a driving force to all Sri Lankan businesses. The main activities of Insurance Subcommittee of ICC Sri Lanka are advocating development and implementation of policy framework for governance and development of insurance in Sri Lanka, climate. We have an eminent panel of professionals, and now I hand over the proceedings to our moderator, Mr. Ainsley Alice. Thank you. Over to you, Mr. Alice.
Hello everyone. Welcome to the webinar, and I wish everyone a fruitful few hours of learning. It is my pleasure and privilege to be the moderator on this webinar on risk management and insurance in the current economic climate, which I can consider it as a timely event and in today's context. I thank the subcommittee, Insurance Subcommittee of the International Chamber of Commerce for their thoughtfulness in bringing this topic to the attention of the public. To introduce myself, I am Ainsley Alice, a chartered insurance professional, having served the local industry for 40 plus years in insurance companies and currently working for an insurance broker. This event is sponsored by Senaratna Insurance Brokers, and I think we should speak some few words about the sponsor. The company was established in 1979 and one of the earliest licensed insurance brokers when the insurance was privatized. The company's high level of professionalism was recognized by the Chartered Insurance Institute of London in 2017 and was awarded the corporate chartered insurance broker status under the empowerment of the Privy Council in Britain. These are internationally recognized gold standard for insurance brokers, publicly committed to customer first approach and ongoing professional development. The chartered status is the benchmark of professional excellence and integrity, and Senaratna Insurance Brokers is the only such institution which has been honored with the chartered status in the whole of South Asia and Central Asia and in Sri Lanka. The company underwrites or company handles largely corporate business and all class of life and general insurance, including international medical, on behalf of Aviva and Bupa. The company offers, Senaratna Insurance Brokers offers a plethora of services such as portfolio analysis, advice on risk management, reinsurance placements, claim recovery guidance, fee-based consultancy, apart from the placement of insurance business. It is also a member of the Worldwide Broker Network, which is a fully integrated broker network of independent property and casualty insurance. The board of directors consists of 3 chartered insurance professionals with collective insurance experience of more than 130 years, and the company has won several international accolades. Thank you, Senath Insurance Brokers, for sponsoring this webinar. Your efforts are well appreciated. We have an expert panel who have agreed to share their knowledge and extensive experience on today's webinar topic on risk management and insurance. I doubt whether there are any other better persons than these professionals to discuss this topic. So, to begin the proceedings, it is my humble duty to introduce the panel of experts so that the participants will know who these people are. Firstly, I go with the number of years in experience, not according to their age. So Joachim Caspers, fondly known as Joey. He has counts over more than 42 years in the field of insurance and has extensive executive experience in the insurance industry in Sri Lanka and overseas, beginning his career at Aiken Spence, which was a principal agent of National Insurance Corporation. After a stint at Aiken Spence, he joined Industrial and Commercial Insurance Brokers. I think he was the general manager and director there. One of the premier insurance brokers in Sri Lanka. In 1997, he joined Finlays, playing a pivotal role in the success of the company and bringing the company as one of the leading insurance brokers in Sri Lanka and in Maldives. In addition to his involvement in insurance, he continued to be engaged in several boards of Finlays Group. He resigned as the managing director of Finlays Insurance Brokers and joined George Stewart's Insurance Brokers recently, and he is the managing director of George Stewart's Insurance Brokers. Joey has been a council member of the Sri Lanka Insurance Institute and one of the past presidents of the Sri Lanka Brokers Association. He holds a diploma in management from the Indian Insurance Institute, National University of Singapore, the Postgraduate Institute of Management, and INSEAD in France. He happens to be a Toastmaster and a Rotarian. Next experienced guy is Mr. Tanuj Edler. Tanuj is the CEO and Managing Director of Orient Insurance Limited, a fully owned subsidiary of Al Futtaim Group of UAE. He counts over 32 years professional experience in the insurance industry and has held many senior management positions in Sri Lanka and overseas insurance companies, namely Norwich Union, Eagle Insurance in Sri Lanka, when it was affiliated with Eagle Star, Zurich Financial Services, and later Aviva and AIA. He has also worked at Abu Dhabi National Insurance Company and has been the chief operating officer at Janashakti Insurance, Janashakti General Insurance before it was sold to another insurance company. And he was also deputy CEO of AIA General Insurance Company. Tanuj is a chartered insurer, an associate member of the Chartered Insurance Institute of London, and a senior associate of Australia and New Zealand Institute of Insurance and Finance. Throughout his illustrious career, Tanuj has been the recipient of multiple accolades and recognition, and the very latest, the special award which he won from Al Futtaim Group as the Al Futtaim Values Award, which is one of the most prestigious recognition awards, and it is a recognition to Sri Lanka as well in the global forum. Tanuj is the treasurer of Insurance Association of Sri Lanka and a member of the Insurance Subcommittee of the ICC. The next panelist is Mr. Suresh Edrisinghe, who has more than 24 years experience and specializing in risk management, insurance operations, and customer experience management. He holds an MBA from the Postgraduate Institute of Management of the University of Jawaharlal and is engineer by academically and obtained the honors degree from University of Moratuwa. He's a member of the Institute of Risk Management, UK, member of the Chartered Insurance Institute of UK, and he has been awarded Certified Risk Professional and Chartered Insurer titles from this apex institution. And he's the first Sri Lankan to be bestowed with these memberships from both these institutions. He's a regular visiting lecturer at the Finance Department of University of Sri Jawaharlal and MBA of Colombo, and for the MBA program in the University of Colombo. A very well sought after presenter and a lecturer on risk management. Currently, he's working as the Director Operations and Specified Officer of AIA Insurance Lanka Limited. Now that I have done with the preliminaries, let's begin the topic, today's webinar topic. To start with, I'm going to fire the first question to Suresh because the topic says risk management and insurance, and he being the expert in risk management. Suresh, you can hear me? Good. You're not muted, I suppose.
Yeah, Ainsley, I can hear you.
Lovely. Nice to hear your voice. Can you just briefly describe for the benefit of the participants what is risk management and its process in a layman's point of view, and how an individual and a corporate adopt risk management techniques to better manage their lives and business?
Yeah, Ainsley. Thank you, Ainsley, for the introduction. And thanks to International Chamber of Commerce Sri Lanka for organizing this timely needed webinar. Ainsley, before getting into the process of risk management, let me give a brief introduction of risk management. Because risk management is comparatively a new discipline which came to organizations' management process in early 60s. Of course, Western nations adopted to formal risk management techniques very early, and then same techniques spread to the other parts of the world, including Asia subsequently. In Sri Lanka also, quite a lot of corporates follow risk management techniques in handling risks applicable to their organizations. Although the risk management is a new subject to organization, risk is, per se is not new. We are dealing with it every day. It's a universal phenomenon because risk is resulting in due to the uncertainty. I mean, what we face every day, like families, organization, everybody. Everything is uncertain. Why? Because we cannot precisely predict what will happen and when it will happen. The both dimension, what and when, cannot be predicted precisely. In other words, we cannot predict severity of an event or a probability of an event which will happen in the future. So that is the uncertainty, and because of that only the risk is emerging. And it is common to everybody. If we take individuals, life is full of risks. All of us face risks such as premature death, injuries, sickness, ailments, loss of employment, damages to our own properties, damages to vehicles, etc. When it comes to business, organizations, risks are more intense, far more greater than the individuals. It is not only like property damages or things like that, but there are many liabilities towards organizations, towards employees, public, environment, and so on. Apart from these inherent risks, which are anyway there, the organizations, they voluntarily also take risk consciously. Why they take risk consciously? If you don't take the risk, there will be no reward. Although risk is considered as bad, a reward is good. So what we have to do is we have to manage the risk to ensure that intended rewards are achieved. So that is the value of the risk management, because at the end, it always gives us a reward. Now, so it is very important, risk management in that context, and we have to do that proactively. That is where the risk management process is coming, as Ainsley asked. This proactive approach of risk management has 4 key steps. Those are the risk identification, risk control, risk financing, and risk administration. For somebody to have a proper risk management in an organization, all these 4 areas has to be fulfilled. So I will briefly explain these 4 steps of risk management very briefly, then everybody will be on the same page. First one is the risk identification. In the process, as I said, there are 4 steps: risk identification, risk control, risk financing, and risk administration. So the risk identification is the first step, and which is the most important and challenging step. Why? If we don't identify the risk applicable to the organization, if we don't identify it at the first place, there is obviously no opportunity for us to deal with that. So organization cannot afford to miss any of the applicable risk. Because of that, risk identification is very much important. Because if the applicable risk is not identified, if that risk is unidentified, obviously that risk will be unattended and it will go to an uncontrollable state, which is not good. So that is why the first step of risk management, which is risk identification, has to be done continuously and systematically. Because why it is continuous? Because all the environments are changing. External environment is changing. Internal environment is changing. So the risks which are applicable today will be not applicable tomorrow. They will be obsolete. And with the external and internal changes, environmental changes, new risks will also come into our risk portfolio. So in the risk identification process, we have to be vigilant and capable enough to capture all the risks applicable to the organization. Now, for instance, if we take the current external environment, now there are a lot of new risks which has come, starting from the utility shortages, denial of access, increased level of inflation, very high interest rates, pressure on forex, etc. already got into our risk portfolio. Even internally, the way we work has got changed. Previously, staff couldn't come to the offices due to pandemics. Now today, due to fuel shortages and transportation issues, new risks such as connectivity issues, staff availability, so on has come as new risks. Apart from that, due to new working models, level of customer service, level of sales, everything has been kind of impacted across the board, everywhere. It can be the services, it can be manufacturing, wherever, financial institutions, wherever. So the risk identification has to be done in a continuous and systematical way to capture all the risks. That is the first step of the risk management process. The second step is in the risk identification itself. Once we come to know what are the risks applicable, we have to measure it in terms of severity and frequency. Because the risk cannot be expressed linearly by saying risk is high or risk is low. It doesn't give us any meaning. Because the risk is a two-dimensional scenario, we have to express the risk also in the two-dimensional way. That is in terms of severity and frequency. So any risk will have these 2 dimensions. That is why we can't say merely that this risk is high or this risk is low. It has to be expressed in terms of severity and frequency. For instance, if we take the credit risk for a financial institute, that credit risk has to be expressed in a manner that credit risk, severity is high, frequency is high. If it is a fire risk, severity is high, but the frequency is low. Likewise, it is important because that is the first step of risk control, which is the next step of risk management. So when we have that understanding, what are the risks applicable to the organization, what is the severity and frequency of those risks, then we have to move to the next step of risk control. Now, when you talk about risk control, what essentially happens there is, in risk control, through our initiatives, either severity of the risk will be reduced or the frequency of the risk will be reduced or reduce the both. So that is what is happening in risk control. So there will be various initiatives which are, unique to organizations, sometimes, which they will take actions to manage the risk. Thereby, either the severity will be lowered or the frequency will be lowered. The third step of risk management is transferring the undesired risk. Although we put all our tries to control the risk, there is a certain component of risk remaining, and that can lead to a catastrophe also. So those are the risks which are undesired, and those has to be transferred to experts, which is also termed as risk financing. Insurance is one of the widely used risk transferring techniques all over the world. In the current context also, insurers are playing a major role because, as we explained, now in the current economic setup environment, both the frequency and the severity of risk have gone up. Undesirable events like robberies, malicious damages, riot strike, all these risks have gone up. Those are having an upward trend. So certain of these risks has to be enemy transferred. In that respect, insurers are playing a major role in that, and they will give the protection needed for their customers. The final step of the risk management is risk administration, where the entire process of risk identification, risk control, risk financing, insurance, and everything is managed through policies and procedures. So, essentially, that is the brief introduction, or rather the description of risk management process.
Thanks, Suresh. End of the day is that a company, an individual or a corporate should perform the activities in identifying risks, then controlling them in terms of frequency and severity of the identified risks, then taking steps to finance it in terms of either self-insurance or by transfer. And then comes the program administration of the entire risk management process. Yeah, so virtually the client has to ensure that the resources and planning is done with a minimum type of impact to the organization. It's the installation.
Yeah.
With a minimum impact of these risks to the organizations to achieve their own, their corporate or individual goals. That's what I believe.
Yes, that is for their survival and also to reap intended rewards.
Yeah. Stepping out of that, Tanuj, I'm going to ask you the next question. Now, he says, Suresh said that in the risk financing, insurance plays a major role in terms of risk transfer. What would insurance be in a layman's point of view? And how does insurance integrate into this risk management process? And how the insurers would recognize the risk management adopted by a client, either by individuals or corporates? And whatever value additions the insurance industry does in improving the risk management practices within the organization, by the public, so that at the end of the day, the national waste of resources are minimized to the greatest extent.
Thank you, Ainsley. Thank you for that kind introduction, and also ICC for this timely event. And good evening to everyone on this webinar. Ainsley, that was a very interesting question. Listening to Suresh made me think about my 32 years experience into insurance. And like you said, you mentioned that in layman terms, what insurance is. So since we have more than 100 participants, I would like to look back and see, okay, what really insurance is. Like Suresh said, insurance is every one of us have a risk in life. Say you own a motor vehicle, there is a risk. So that element of risk is transferred to an insurance company for a known premium. So basically, insurance operates as a risk transfer mechanism. It's a very simple mechanism, but it's complicated in essence how it works. So like if we have a, let's say in our village, we might have a funeral society where you would have many people contributing towards a fund, and then if someone has an untimely death, then that is compensated. The same way how insurance operates, where insurance collects money from many and creates a pool, and that pool operates in a way that it compensates the losses of the few. So that is insurance. And this insurance is scientifically, like Suresh mentioned, frequency and severity, a lot of actuarial work comes into this aspect, science comes into place, and then you put all these factors together, and that's what insurance is. And in today's context, where the world is ever changing, there is so much of elements in terms of risk. Everything that we do is uncertain, and that uncertainty is transferred to an insurance company. And like Ainsley, what you said is, okay, how does insurance integrate into risk management? So in very simple layman's terms, say I have my motor vehicle. So when I put it to the road, say my vehicle is valued at 10 million rupees, for example. So what would I do? If something happens, I risk paying 10 million for that vehicle, right? So I would transfer that element of risk to an insurance company for a known premium, which may be about very, very, very small amount. So insurance companies, what they do is they add all these values together, create a pool, and compensate for the losses of the few. That's the way that insurance operates. And also in today's context, where there is so much of risk, what we do, like say, I'll take a very simple example, a motor vehicle, that is practical to all our lives, right? So when you own a vehicle and when you drive a vehicle on the road, there so many things can happen in terms of that vehicle. So how we manage that, like, so, okay, if we think, okay, this vehicle is fully insured, what happens? I drive the way I want to, then what will happen eventually is you might meet with an accident, and your premiums might, once you meet with an accident, your insurance premiums will go up every year. So you end up paying more. So what you got to do is, if you own a vehicle, you should always make sure that you take care of your vehicle. You would drive in the most prudent manner. Say in insurance, what we see mostly is that people sometimes, without thinking twice, they drive the vehicle under influence of alcohol, and then they meet with an accident. And when there is an accident, they come back to the insurance company with all kinds of reasons. But what you would predominantly do in terms of risk management is, if you have a drink, don't drive. Okay, so it's very simple how you would take care of yourself in terms of, like Suresh said, health insurance. Say if you take care of your health properly, and you would make sure that your insurance premiums are less, and you will live longevity, and your insurance premiums will be less. So basically, risk management is everything that we do in our life to improve risk. And there is an element which may be it's uncertain. You don't know. Act of God can happen. There can be catastrophes. There can be unforeseen events. So all those events can be transferred to an insurance company, who would always come back to you. But you should always act as you don't have insurance. You don't have protection. You should make sure your fundamental guards are on all the time. We saw typical examples during pandemic. Like if you look at certain factories or certain business establishments, due to pandemic, people couldn't come to work. So those establishments were just left unattended. So the fire extinguishers were not looked after. There was no water in the hydrant. The gutters were not cleaned. So what happens if it rains? There is no one to look after. The whole thing floods, and the entire business establishments gets affected. And as a result, the entire process gets delayed. You can't produce. You can't get your factories running. You can't continue your work. So these whole thing will totally hamper and create waste and unwanted things. And ultimately what happens is, once you make claims or if you incur losses, your insurance program also is going to cost you more. So the more you act as if you're not insured, the more you take care of it, though you know your risk and manage it properly, your insurances will be safe, your business will be safe, you will continue, and also the unwanted waste in society and in the whole business process will be eliminated. So in putting it in a nutshell, Ainsley, I think this is what insurance is. Insurance is not something that, if you have insurance, you just everything is covered and you just be normal. No, insurance is there for an uncertain event to always fall back. Insurance is a fallback. And in society, what happens is insurance is the last priority of everyone, right? We will do everything that we want to. Say in terms of life insurance, what would do? Okay, only if I can afford, I will go for and get a life insurance, right? So, but what happens if I meet with an accident and die on the road today? What will happen to my family? Who would pay? Would relations come? Relations will come for a funeral. They'll say hi, bye, and go off, right? Who will look after financially? Who will take care of your family? So that is risk management. When you can make insurance your prime priority, Sri Lankan society needs to understand this. Insurance is not your last priority. It should be your number one priority. In terms of life or in terms of general, make sure that you identify this risk, make sure that you give it priority so that it will take care of you in case of an unforeseen event. Ainsley, I think.
Tanuj, thanks. You have covered most of it. I believe that linking the two of you all, the risk, the insurance is actually the last link in, I believe, is the last link in risk management, where you do your homework and housekeeping and blah, blah. And then what cannot be handled by you in terms of internal resources, then you have to seek insurance protection so that those unwanted risks and catastrophes do not have a bearing on your balance sheet. That's what I believe you were saying, Tanuj. Now I get to the man who is gelling the insurance company and the client, and he's from the same profession as I am, Mr. Joey Jaspers. Joey, I hope you were listening to all these things that the insurance guys are talking about.
I certainly have, Ainsley.
Good. So how would the broker advise their clients, I'm talking individuals and corporates both together, how to manage their property and what the risks to be transferred, and what's your broker's role in the whole process of advising the clients, how best to insure, at what level. So as an insurance, as an experienced professional broker, can the participants know the role of a broker in advising clients and linking insurance and risk management, stemming from the points that Suresh and Tanuj said? Joey?
Thank you, Ainsley, and thank you, ICC, for organizing this seminar. Good afternoon, all. I'd first like to very briefly touch on a definition of insurance risk management. There are different definitions, but this is a kind of working definition that we use. So it is the quantification of the likelihood and financial impact of events that may occur in the customer's world that requires settlement by the insurer, and the ability of spreading these risks across other insurers and underwriters in the market. To put it very simply, Suresh identified the risk management program, which basically consisted after identification of risk control and mitigation, risk transfer and risk retention. Now, insurance risk management is an outcome, and only one of the outcomes of risk control and mitigation and risk transfer. Okay, there are various other steps that a client can take in controlling and mitigating risks and also in handling risk transfer mechanisms, and insurance is one of those mechanisms. Now, the role of the insurance broker is to sit down with the client and then identify those risks which are capable of an insurance solution. Having gone through the risk management process of a client and then identify the risks that the businesses are exposed to, the broker would then help the client to identify those risks which are capable of insurance solutions. Okay. So in terms of a structure, the broker would help the client to assess, design, and implement an insurance strategy and an insurance program. Okay. As an outcome of that, they would provide the corporate client an insurance risk framework. Now, a framework would consist of all areas of the insurer, of the client's business, which again are capable of insurance measurement. So broadly, it's divided into 4 areas. First would be those assets which the insurance uses in its business, which are capable of being insured. Okay, and I use assets very broadly. It would also include assets that are in movement and transfer and so on. Okay, so you'll have things like your property insurance, you'll have your computer and electronic coverage, you'll have your machinery breakdown, you'll have your motor vehicle insurance, you'll have your marine insurance for your imports and exports and so on. So all different types of insurances which are covering the assets that you use in your business. Then you would have a section that would cover what we call in the insurance jargon pecuniary losses, which are basically financial losses. Okay? And those would include things like business interruption, fidelity guarantee, and so on. Then you have a raft of different types of insurances where your client would be exposed to claims from others. These are liabilities. Okay, so you have things like public liability, you have professional indemnity, you have workman's compensation, you'll have product liability. If you own vessels, you'll also have things like P&I cover. On your motor vehicle, you'll have your third-party insurance and so on. So all kinds of different exposures that a business would have to third-party claims, which we classify as liabilities. And finally, you'll have a raft of businesses, raft of different policies covering employee benefits. Okay, and these would include your medical insurance, your life insurance coverages, your overseas travel insurance, personal accident, and so on. So the framework for this will be provided for the broker, and together with the client, they will sit down and then help identify how the program should be structured. Okay, what type of values that you should bring to the table in respect of your insurance program. Okay, what is your risk appetite? How much of risk are you able to absorb? Ainsley mentioned balance sheet. So how much of risk is the company capable of absorbing to its balance sheet? That has a bearing on the structure of your program. It could be that insurance is not the best solution for you. Okay? You might decide that the frequency and impact is too vague or too remote for it to really affect your balance sheet, and you may well decide to absorb that to internal funding. And that's a perfectly valid way to go in terms of arranging your insurance program. So this process of identifying risk is something that the broker will sit down and then help its corporate client in terms of identification. In terms of risk appetite, I also need to mention that it has a bearing on the deductibles that are applicable on your insurance policies. Okay, now deductibles are those levels of a loss which you as a corporate entity will absorb anyway. Okay, it has a bearing on the rates that you pay on your policies of insurance. So rule of thumb is higher your deductible, lower your rate. And the converse is true, lower your deductible, higher your rates. Also, as I've already mentioned, having looked at your risk appetite, self-insurance is a viable option as far as businesses are concerned. Then the broker would also look at your historic claims and losses in helping you to identify as to what is the best fit insurance program that is suitable for your company. Having done all of that, the broker would then help you to ensure that you're insuring for the correct values. I just want to spend a moment of time to express the importance of ensuring that your program is correctly valued, okay, which is very, very important in the current economic crisis that Sri Lanka is facing. Costs have increased. As you know, construction costs have shot up. Import of anything, purchase of anything has also increased significantly, 100, 200, 300%. Now, your insurance is on the basis that you insure for the correct value. And any underinsurance will result in you being penalized when the insurance claim is looked at by the insurance company. So, sitting with your client and then ensuring that you're insuring for your correct value is something that is extremely important. Okay. Then obviously the pricing of the program comes into play. In deciding on whether a client needs to accept insurance, they will have to look at the scope of cover and then also the pricing that is brought to the table. Obviously, the broker will help the client to look at the financial stability of the insurance company, their ability to service the client, not only in terms of their general servicing ability, but obviously in relation to claims. Okay. Also, you will look at the reinsurance program behind all. All of this is in terms of what the broker would bring to the table in helping the client to better manage their risk. The broker would also assist the client in the evaluation of terms that are obtained from the market in respect to the program, the placement and management of the program, and finally, of course, claims. Having done all of that, the broker would then sit down together with the client and then analyze the insurance program and identify gaps in the coverage. Okay, because although you have taken out an insurance program, not all risks that you think of are actually covered, or if they are covered with certain limitations. So those gaps in the coverage on that structure that I outlined is also an extremely important role as far as the broker is concerned. That kind of, I'll end my initial comments at that point, Ainsley, the kind of, I hope, encapsulates the role of insurance into the risk management program and also the role that the broker plays in managing those risks.
Thanks, Joey. Thanks for this one. Thanks for lovely thoughts about the thing. I saw some insurance, Tanuj smiling. I don't know. He's expecting the worst from the brokers. I don't know. Anyway, I know that the trouble that is being given by insurance brokers to the insurance companies when they present the client and the risk profile and the risk portfolio to the insurance companies and the amount of negotiations that the brokers do undertake on behalf of the client, and insurers are sometimes in a fix trying to solve this problem and gel the client and the broker. Anyway, great. I have one question that has already come in from one of the participants. This is fired at Tanuj. He says that during the pandemic issues, the hoteliers industry was gravely affected with people not coming to hotels as well as staff numbers being reduced, and the hotels would not have that amount of money to continue in the same fashion, the same maintenance procedures that they had adopted as part of risk management and housekeeping and good housekeeping and whatnot. How would the insurance companies look at this now? Now that you just mentioned that cleaning gutters and servicing ACs might get delayed and not as usual. I know there's a time period about closures and whatever. How would the insurers look? Do they look at it sympathetically, or they use the exact contract wording, or how is it, Tanuj?
Yes, so that's a very good question, and thank you for that question. Basically, I would like to go back to what I said. Insurance, basically, how you look at insurance companies is the key here. Insurance companies are made up of all the customers' money. It's premiums, right? So every customer, I would interpret it as all the customers are shareholders of an insurance company, right? So everyone's money is put together in a pool and paid and compensated for the few who would have losses. That is the principle in a nutshell of insurance. So basically, in a situation like this, because everyone's fund is here, right? Insurance company is not a bottomless pit. It is customers' money coming in to pay the losses of the few. So basically, to answer that question, if I was a hotel owner, I should act perfectly. I'm not insured. If I don't have insurance, what would I do? During pandemic, if I can't come, have I looked after it to the best of my knowledge? Have I done everything that is possible to make sure that my asset is safe? And if beyond that, something had happened, definitely like Ainsley said, the insurance companies would this thing, but I should act. If I'm a hotel owner or if I'm an asset owner, I should act if I'm not insured. And that is because of we got to look at insurance companies as a fund management. We manage everyone's money put together so that we compensate the few. So it's not fair if I extend and, if someone, due to something, I go and pay something else to extra to someone else, it's not fair by the others. So that's how insurance works. Ainsley, I suppose I think you could add to that as well.
Yeah, but to add to what you're saying, Tanuj, is that there is a unoccupancy clause of 30 days, I think, if I'm not mistaken, on property insurance. So anything beyond that, it is the duty of the client, as far as the insurer is concerned, to notify that the is unoccupied. And looking at the client's point of view and taking Suresh's thoughts as well, certain things, whether it's, it may not be the same fashion, certain amount of housekeeping and maintenance should go in, because as Tanuj said earlier, insurance and also I think Joy also touched upon it, insurance company does not pay all the claims. They pay almost all legitimate claims. What I meant was, insurance claim will not cover 100% of the client's losses. There are some conditions, there are terms, there are deductibles, there are exclusions. Apart from that, even if the 100% claim is made by the insurance company, there's something called work loss or business interruption. Let's take a simple employee's injury. He gets injured, his arm gets injured in one of the machines, and the other employee will stop their work and try to assist him, and then try to call an ambulance. There's work stoppage. Then probably hopefully there is no banning of the premises, but there'll be some workers who will go with him to the hospital. So now these kind of losses won't be paid. The employee will get a compensation for the injury caused, but if it's a permanent injury, there again it is the compensation would not at all be suffice for the person concerned. So it's always good to have, isn't it, Tanuj, isn't it, Suresh? It's always good to have your risk management process and safety measures working up and running at whatever possible levels to ensure that there is no risks that are going to damage or affect the company, isn't it? Suresh?
Absolutely, Ainsley. I would perfectly agree with that. As if all of us should, and companies should act as if we are not insured. And I'm sure if there is something that went beyond control, all the insurance companies in Sri Lanka are very, very flexible in that. Most of the insurance companies in Sri Lanka, brokers and everyone are very professional. And if we know that this is beyond the control of the client or whatever, and something that is foreseen, we will not, hold a black and white writing and do it. That's how the market works.
Can I add to that conversation? Just to add to that, a different dimension during the lockdown and COVID shutdowns and so on, and now as well, the insurance companies have reacted very positively in helping clients manage their premiums and so on. Okay, that's one aspect of that answer. They have been flexible despite the fact that there is premium payment warranties and so on. Tanuj's company, Suresh's company, and also all the other insurance companies in the market have extended their support to clients who are facing financial difficulties as a result of the economic situation that we have been going through and are currently through. So that's also something that should be recognized.
Suresh, you mentioned about the risk portfolio being different in this day and age because of economic crisis, social unrest, so on and so forth. Like escalation, housebreaking, vandalism, riot, and there is arson in certain places. Is there an incentive for a guy or a person, or shouldn't there be an incentive on the person, corporate or individual, to adopt some kind of risk management or do a risk reprocess, look at their risk, integrated risk management process?
Of course, yes, there is incentive in adopting to risk management. As you quite correctly said that the risk landscape has now changed. There are obviously both the frequency and the severity of the risk has come up. The severity, when you see the cost of goods and things, even for you to reinstate a building, the cost will be very much high than a couple of months ago. So the severity has gone up in that respect, and the frequency is also going up due to social unrest and everything. So because of that, the customers, or rather the corporate organization, everybody has to be more cautious, and they have to continue their risk management procedures, especially the risk controls that are in place. Those have to be continued, and make sure that the risk levels are kept low. So the biggest incentive, as I said, that having risk management is the survival of the business. You also touch upon that it is not the direct cost what we are talking about always. There will be so many indirect costs which are coming. So if the business is interrupted until the business is reinstated, so there will be a vacuum. So how to keep the market share and things during that period? How do you pay wages, salaries for employees? So it is always good to have your risk management in place and continue the risk control procedures in order to prevent any kind of undesirable event. If at all, if it's due to uncertainty, if something happens, then that is where the insurance will come. Insurers and insurance coverage will come and help you. So the risk control has to be continued. There's a big incentive for that. And the proper coverage, insurance coverage, has to be also continued in that respect.
Thanks. Tanuj, I'm going to get back to you now. I, being a broker as well, I see that the capacities in the market and appetite for risk acceptance is reducing, especially in the wake of this foreign exchange crisis that is prevalent in the country. Do you think there is a difficulty in the local insurance arena, insurance companies not taking on risk, or they are a bit averse to risk, or they have difficulty in finding reinsurance or reinsurance capacities? Tanuj?
Ainsley, to answer that question, I think post-pandemic and also slightly before that, like I said, insurance is a global phenomenon. It's a risk transfer mechanism where risk in Sri Lanka is shared with other companies globally. It's the world is a pool in terms of insurance. So basically, in terms of pandemic, the insurance world was drastically affected. And also natural disasters and catastrophe really affected all the insurance companies, and their losses were huge. So it's one big pool. So in terms of the backdrop of this whole thing, insurance terms and rates have hardened globally. And what happened in Sri Lanka now is a completely new factor, where as a country we are facing the forex issue, and there is issuing remittances of foreign currency. So what we as a nation should understand is this is a national problem. It is there. So we are finding it really hard to find dollars to pay the insurance premiums. So we are talking to the international markets, like the government is negotiating with IMF and to bring in some finances for Sri Lanka. The same is with us, because we don't stand alone. it's a national problem, and we got to somehow manage. So we have been talking to our reinsurers. The government is aware of it. They are also talking. So we will have to hope that in time to come, this will heal. But again, insurance companies, in terms of capacity and expertise, the Sri Lankan insurance industry is ever resilient. And in terms of capacity and insuring risks, we are ever more there. And we have given that assurance to our reinsurers as well that this is a time, it's a matter of time since we get this remittances resolved. So I'm sure the reinsurers will hold hands, and we should come over this very soon.
So do you think, Dhanush, the market is still able to do co-insurance because they can't find reinsurance and reinsurance remittance?
It is a challenge, Ainsley. I don't want to shy away from it. It's truly a challenge because reinsurers, what happens is everything, like Joey said, when the pandemic, we gave leverage to the customers to delay premiums. So we got to go back to the reinsurers and tell them, okay, give us some time till we resolve our domestic issues, then we will find money. So it's all a timing issue. So I think all the insurance companies in Sri Lanka are very resilient. We are there. We will make sure that the capacities are some or other found, but it is a challenge.
There's a question from, I think you know the guy, Kapila Rutilaka. He's asking, I don't know who's going to answer this question and put it to the panel. Is there appetite for non-property damage business interruption cover in Sri Lanka? I think
Short answer would be no.
Answer.
Short answer would be no.
Sorry?
Short answer would be no. There is no appetite for that at the moment.
Sorry.
Given the issue that Paloja just outlined.
It was answered, is it? Non-property damage BI cover.
Yeah, non-property damage BI cover would be very difficult to arrange in the context of tightened the reinsurance market that the insurance companies have faced with. So I would say the answer to that in Sri Lanka is no. Not at the moment.
Not at the moment, yeah.
Only thing I think before the pandemic, gentlemen, I think there was a cover with non-property damage BI, the infectious disease.
Yeah.
That was available. I think that was now, since then it has stopped. So there is no, that's the only thing that I pops into my mind where there's a BI cover without the property damage. Anyone else want to add something on that?
Yeah, you also have things like denial of access and so on. So, yeah. So, but nowadays, that's almost impossible to arrange.
Closure by public authority due to any infectious disease, that kind of stuff.
These are all special. Some of these are specialty covers, no, Ainsley. So basically,
yes.
There is like, if you have the right premium, if you have the right environment, all this is possible in insurance. But like Joey says, currently, if you look at today's context, no is the answer. But in a perfect world, and also globally, insurance rates are really, really hardened because of the Ukraine war, the pandemic, and it just, it has really drained out insurance companies. So the recovery will take a couple of years. Until then, we got to tighten our belts and manage our risks, like Suresh says.
Okay. Thanks. Joey, do you think that we have difficult, the brokers or the insurance companies have difficulty in collecting premiums from the clients during this crunch days?
Again, the short answer to that is yes, for obvious reasons. Many, if not all, corporates are going through extremely difficult times, and payment of the premium is challenging. Even in the best of times, insurance was probably way down the list of their clients' priorities. However, counterbalancing that is the fact that insurance policies are deemed to be automatically cancelled if the premium is not paid within 60 days of cover incepting. So clients will have to balance out their delayed payments against the risk that their insurance cover is technically no longer in place if the premium is not paid within 60 days. Most of the large corporates that we deal with are aware of this particular issue, and wherever an extension is required, we actually make a written request for such extension. but most will have to comply with payment of the premium. Also, there are certain insurance policies where special reinsurance is required by the insurance companies. Now, on those, frequently the premiums have to be paid in even shorter periods because Tanoj and the other insurance companies, including Suresh and so on, will need to remit these monies to their reinsurers within far shorter periods. And these days, these reinsurers are less likely to grant extended periods of credit. So payment of premium is certainly delayed. It's difficult for both the insurance companies and the brokers, but the clients need to be aware of the risk, given the fact that there is automatic cancellation of cover if premium is unpaid.
That's a bit of a tricky question. I don't know who will tackle it. The question is, how do you think emerging technologies like blockchain and artificial intelligence, AI, will impact the insurance industry in the future? Who is the...
Shall I take a shot at it first? I love that question because I strongly believe that technology is the future of insurance, especially we learned a lesson with the pandemic, with going fully digital. So I feel that AI would play a lot in more developed markets. AI plays a large part in insurance and rating and giving customers a solution. In Sri Lanka also, I believe that we should adopt technology now. For simple, we had huge miles and miles of queues for fuel, but with the QR code, I think it shortened. So it's how technology fixed a large problem. I'm not being political, but a realistic thing. And if you look at the insurance penetration in Sri Lanka, it's at very, very low levels, less than 1.5% of GDP. So how do we take it to the next level? Technology. We have so much of technology. If you look at more developed markets, you have mall assurance, you have just insurance distributed through mobile platforms. You have so much and so much more. So we got to go into that micro level distribution, because if you just look at the pie, the Sri Lankan insurance pie is limited to personal selling. We don't, as Sri Lankans, if you want insurance, you would call your person and ask, I'll call Joey and ask him, Joey, I have a requirement, what's the insurance company that you can give them, what product you can give. But I think if you could evolve more, there is another space out there where people can't afford to pay large amount of premiums at one given time. So you got to break it out, you got to use technology, and you got to take insurance to the next level. So I think AI technology is the way forward to expand the pie. Otherwise, we'll be living in the same pie.
Underwriting and access to insurance, I suppose.
Distribution. I think taking it to the next level, we should use it.
It will augment the underwriting process as well, I suppose.
Yeah, Ainsley, just to add to that, yes, in assessing the risk, AI will play a major role because can see the past trends and all from the machine, and machine will suggest what is the terms and the way of accepting that risk. That will AI especially will ace the process and give a good customer experience also, because the process of onboarding will be, that time will be also very much shorter when we use those technologies.
There was a question on online where the building is on rent and the tenancy agreement says that the tenant should insure it. Obviously, the insurable interest can be created by ownership, by contract, and by law. That's the way it is. And since the tenancy agreement says that the tenant is responsible for the damage to the building, he has insurable interest. And the question is that how will the insurers look at the claim? The thing is that the building has to be insured in both parties' name, Tanoj, isn't it?
I shall leave you to answer that question, because I think you are more qualified to answer that.
The insurance should be in both parties' names, I believe. So for their respective rights and interests. So if the building is damaged, the insurance company will ask a waiver or a sign off or letter of indemnity from the other party to whom the money should be paid to for repair or reconstruct the building. I hope, Jupiter, I answered your question.
Yeah.
Siddhanta has some question. Siddhanta? has asked, we would like to know the panel's view of impact of high inflation presently we are experiencing on insured and insurance industry. Who would like to tackle the question?
Actually, I kind of touched on that during my opening comments. So ensuring for the correct values in the context of high inflation is something that is extremely important, because those average can apply. So it is duty of broker and also the client to ensure that the insurance program that has been arranged takes into account inflation.
That's another question that has come again to an insurance company, insurer rather. There's a flood threat in Ratnapura, and since it's a known case of flood area, and it's a known loss, as Suresh also can put in, insurers do not like insuring these kind of risks which are prone to flood in Ratnapura area. How would you like to tackle also?
And so basically known risk insurance is for unknown eventualities. So if it's a flood prone, if it's affected by flood, insurance will definitely look at it with concern. But if there are risk management initiatives, the risk has improved compared to the prior situation. If the client has made certain risk management, now certain areas traditionally flooding areas, but with new storm drains and changing the flow of water, certain places are better, certain places are worse with the highway and so on and so forth. So basically insurance companies will hesitate to write known losses, but again with risk management and the proper terms and conditions, maybe you could consider it. I don't have a straight answer for that.
Yeah, just to add to that, Tanuj, yeah, insurers will not take, insurance is always there for unforeseen risk, that's right. And certain areas are flood prone, and there are certain localities also. In that respect, the risk management initiative is the best way, managing that particular risk. So there are various ways of, kind of, protect property from floods, the risk control initiative. So we have to follow those.
Okay. Getting some questions. Good. Thanks for all the questions that came up. I think again, an insurance question. We know that business interruption is policy pays gross profit for during the period the business was interrupted. That's called the indemnity period. Now, don't you think that the client should relook at their indemnity periods, knowing the fact that the difficulty in getting repairs and replacements and machinery imports due to forex issues? How would the insurance company look at it, or how would a broker advise their client how best to tackle this?
That's a good point, Ezri. So, I mean, obviously, clients need to relook at the periods of indemnity that they have on their policies. So, for the bit of people who might not know what it is, periods of indemnity are the required for your business to recover after loss. Now, frequently, this is set at about 12 months. There can be variations, can be shorter periods and longer periods. So, Ezri's point is that given the fact that imports are difficult and time consuming, especially in today's context, these periods may need to be lengthened. However, when you do that, you need to then insure for the higher value of your anticipated gross profits. So let's say you're insuring for a 24-month period of indemnity instead of 12 months, then you got to insure for 24 months gross profit as well. This will automatically have an impact on your premium. There is a trade-off. So I think together with your insurance company or your broker, the client should sit down and evaluate lengthening the period. And if they do that, what would be the impact on premium and whether that is something that they should afford.
Next to anything? Do you see an increase in the claims, Tanuj?
Sorry,
Do you experience an increase in the claims?
Definitely, inflation has hit the insurance companies very badly, especially in motor and health, direct impact. say, for example, Axio headlight, which would cost 400,000 6 months ago, is 1.4 million today. So same, even hospital medical charges, the inflation is 40% plus or,
So
or
do you have
60%.
something called, do you all provide something called average relief or something on this?
No, what we do,
Because
Ainsley, is
average is under insurance clause.
yeah, definitely. Like, we understand that this is something that no one expected, right? So at a time of a renewal, yeah, you got to make sure that your asset is insured at the right price. But in the middle, if something happens, insurance companies will always will be considerate of the fact that has happened. And in terms of motor partial losses, we as a company have always been empathetic towards our customers. We have understood that, and we have honored most of the claims. So it's a challenge for the insurance company as well, because like I said, insurance is not a bottomless pit, right? All the insurance companies made up of customers' premiums, and we got to make sure that justice is done to everyone. It's just a distribution mechanism to make sure that all ends are met. So we can't just pay the way we want to for the few, because we got to do justice for everyone.
Suresh, now, as you were a risk manager and or CRO type of role that you played at AIA, if I'm wrong, please pardon me. So how now this inflation, increased cost in claims and so on and so forth, delaying premium collections, how would an insurance company do risk management? Shouldn't they also do some kind of risk management?
Yes, Ainsley. In fact, Ainsley, I'm looking out.
Why I'm asking this question, not for the sake benefit of the insurers or insurance company, but to give a kind of some comfort and confidence to insuring public that the insurance company do not go bankrupt during this process. So in that angle, I'm asking that question.
Yes. Ainsley, I'm looking after the operations. The risk parties also complaints will manage. But for you answer your question, the clients would also want to see that insurance companies are stable even in this economic environment. So regulator also plays a major part of it because capital adequacy ratios and things are monitored. So these are kind of publicly available. Customers can also go through and assess the stability of insurance company that they want to cover their risk. That is from the stability of insurance companies. From the premium payments and things, as you also touch upon, yes, customers will also find certain difficulties in paying premiums on time, but it is again the responsibility of the insurer, where as insurers, they have to continuously engage with customers, educate them the benefit of the insurance, importance of insurance, and get them to pay their premium. Because if the premium is not paid, if the policies are lapsed, then the final repercussions will be serious. Apart from educating the customers for premium payment and the continuous engagement, insurers also should provide more convenient premium payment platforms for customers, because they can't now travel and pay premiums and things like that. But the online platforms and things will be more welcome by customers in the current context.
Okay, I think we have run a few minutes more than the required time. I think we can talk for a day, I think, with all these topics, and I'm getting a barrage of questions. Some of them I might answer them offline. Thank you very much for the participants. I hope you all learned something out of it from the three eminent panelists. I don't think we can get anything better than these people from the industry to answer these kind of questions and handle this topic. Thank you very much, Tanuj, Suresh, and Joy, for spending your valuable time and sharing your invaluable experience and expertise with the public. And thanks once again to the Insurance Subcommittee of the International Chamber of Commerce Sri Lanka and for the Chamber for hosting this valuable seminar. Thank you very much, and wish everyone a fruitful evening and a good Friday and a fantastic weekend. Thank you.
Thank you. Thank you.
Thank you, Ainsley. Thank you very much.